Welcome to the latest Motley Fool Scoreboard. I'm on in Chocolate. We've got longtime fools, Dan Caplinger and Lou Whiteman, giving a 1 to 10 rating to a company that helps companies track their vehicles despite losing every spelling bee it ever entered. It's Karooooo, ticker symbol K-A-R-O. That's Karooooo with a K and 5 O's. We'll rate the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Dan's at a 7. Lou, you're at a 6.
The only company named after Tony the Tiger from the cereal ads, right? But yeah, so there's a fascinating origin story here. A South African entrepreneur trying to address what was a really big issue at the time, carjacking. It's turned it into a strong business serving a real need for corporate customers, real-time fleet tracking for corporate customers at other services, just kind of knowing where your people are. A lot to like here, but this is still mostly a local story, with South Africa accounting for about 3/4 of sales. And they're, that's where it was a few years ago too. So this promised growth, we're still sort of waiting to see it. Factor in, there are a lot of companies offering similar services. So maybe not exactly, but there is competition here. So a good business, but with some reason to worry about growth from here. A 6.
Yeah, agreed, although I gave a slightly better score. I think that real-time data for transportation fleet operators, it's tapping into kind of this broader theme of how best to use the data that we collect from just about every source these days. I think that Karooooo's done a good job of building up its international business, expanding out from origins in South Africa and spreading to several different countries really around the world at this point. It's a good direction to see, and I like what I'm seeing from them.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Dan's at an 8. Lou, you're at a 7.
So we love founder-led companies here with good reason. And I think, the growth, especially in the home market, it has been impressive. So kudos to the CEO, Zach Callisto. But look, there is a history here of related party transactions that, might be in the past, and now they've grown, and it was just kind of setting the table at the beginning, but that needs to be watched, especially since he owns a 75% voting stake. To me, it's kind of CEO here, a plus and a minus. It's good to have skin in the game. It's good to have all of the things we like about this, but investors need to realize that they aren't the drivers of this truck. They are the passengers.
Yeah, I like a founder who establishes early on they're not going to get pushed around. And I really like that Callisto did this with, rather than, caving in to a owner of a domain name that might have that might have allowed Callisto to start his business with fewer O's at the end of the name. Instead, Callisto just said, you know what? I'm not paying you for that website domain. I'm just going to add some more O's until I can get a domain that I can register for free. That's kind of my kind of cheapskate thinking, I got to say. But more seriously, Callisto, motivated, dedicated to the business, has retained a large financial stake in the company. Those are things I like to see. Yes, don't like to see the related party stuff, but nevertheless, it didn't keep me from inching a little bit higher, giving Karooooo an 8 in this area.
For financials, a 10 is a fortress, a 1 is yikes. Both of you are at a 7, Lou.
This is really good for the maturity and just kind of where this company is in its life cycle. Strong growth, strong profits, more cash than debt. They even pay a dividend. It's just a lot to like. 26 times earnings, it's not cheap, but it's down from what it was. And with the growth trajectory, it doesn't seem bad. I note that they are going to have to figure out that non-South African growth. They have planted the seeds for that to happen, but we are going to actually need to see that bearing fruit. That could mean more spending, and at least for a time being, a hit to margins and a hit to profitability in this beautiful balance sheet. So at least there's stuff to watch here that brings down my score, but overall it's a really clean, nice financial picture for such a young company.
Yeah, if I handicapped for the size of Karooooo, then 7 would be too low. I'd probably go with like an 8 or a 9. And everything Lou said, I agree with. Strong growth, already profitable at this point. Very unusual for a growth company. Negligible debt, so plenty of capital flexibility going forward. Just a very solid footing for a company at this stage in its development. Kind of a rare thing among growth stocks, and it's admirable in its way.
Dan, let's move on to valuation. How well will Karooooo's stock do over the next 5 years, and how safe is it? 10 is a sure thing, 1 is a lottery ticket.
All right, folks, hold on here because you're gonna hear something that is a rare thing for me. I'm projecting 10 to 15% on the 5-year return. Safety score of 6. Let's be clear, and let me rein in the enthusiasm a little bit. This is a rare departure for me. Just about every other pick I've made on the scoreboard segment has been 5 to 10%. I think that Karooooo is probably going to be at the low end of that 10 to 15% range, but it's still above my market target, and it comes even as the stock has had a really good performance over the past year or so. I just think that there's more room to run if Karooooo can keep breaking into new markets the way that it has recently.
Yeah, I'm at 10 to 50% too. Look, I said I have questions, but I'm willing to give the benefit of the doubt here that they will find a way to grow internationally. And look, that 2.5% dividend yield makes this a total return story and sort of helps me get to 10 to 15%. But I'm going to concede that I am giving them the benefit of the doubt, and things may not go to plan. We're kind of still, like I say, frozen in percentage of sales outside South Africa from 2 years ago. So it's still a wait and see. That brings down my safety score to a 4.
It's topic time. Dan, is there a company in cruise space you like more?
Yeah, not really exactly in the same space, but I do think that the trend towards using telematic data in transportation applications is established beyond Karooooo's particular use case. I'd suggest investors take a look at Progressive, ticker PGR. They're using the same kind of data in their auto insurance business, both on the consumer side and on the corporate business, auto insurance side. I think that stock is worth looking at some desirable and interesting attributes for that company.
So I didn't come to an answer here, but I have a story about that I think is worth telling. I was trying to find someone I like better. I reached out to some companies I know that are in this business to say, who do you use? And the answers I got, one of them was Oracle and one of them was Verizon, which to me, I'm not going to say that either of those are better, but it does at least speak to the part of the risk here is the huge number of competitors doing at least similar things. So I don't know if I'd rather go with the pure play than buy Oracle for this, but just know, fools, as you're getting involved, that there are a lot of other people at least trying to do some of what they're doing.
Thank you to both Lou and to Dan. They've given Karooooo an all right overall score of 6.7 out of 10, with lower scores for the business and safety. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Invitation Homes. Till then, Fool on. It is Karooooo.
With emphasis on the ooh.
Karooooo!
Karooooo.